Let's talk about the cost of renouncing your citizenship. What can you tell us about that?
Well, at a minimum...
Yeah, who has to pay it and who doesn't?
Right. At a minimum, anyone who goes into a U.S. consulate and officially renounces has to pay $2,350 US, or the local equivalent, for the privilege of giving up your passport. That's a sunk cost right off the start.
Oh, I'd be up for that.
Yeah. And so for many people, that might be the end of the story with regards to real costs. The question then becomes, what about, how do we determine what those costs might be for others from a tax point of view? Now, we talked a little bit earlier about the concept of a covered expatriate. And so the question becomes, when you are someone who's going to renounce or thinking about renunciation, how do you know what the answer is for yourself about whether you are a covered expat if you renounce or not a covered expat? And the point there is there are 3 tests. And if you meet any one of them, you are considered to be a covered expat, and then you got to look at the outcomes of that. The test is one, you look at whether you've covered all of the responsibilities of U.S. filing for the 5 years prior to the year of renunciation. So if you renounce in 2025, you need to have done every bit of U.S. filing for the years 2020 through 2024.
Okay.
FBARs, foreign trusts, companies, whatever it might be, everything must have been done. Mm-hmm. Assuming the answer to that is therefore yes, mm-hmm. You then look at the average tax liability for those 5 years and say, okay, is it above a threshold? That threshold gets indexed every year for inflation. It's currently just below 200,000. I don't have the exact number off the top of my head.
So that's it. You only can do it if you have less than 200,000.
Average for those 5 years, which, to be fair, a lot of people, if we're looking at Australia, because of the high tax rates in Australia and therefore the corresponding credits that flow through to the U.S. return, a lot of people are below that threshold because of that reason. But then C, the third one, is the one that we really run into the issues with, and that's a net wealth test.
Yeah.
And the reason why that's so problematic is it's not indexed. It never has been. And it's been in place at $2 million US forever and ever, as long as since 2008 when these rules were put into place. And so that's the one where we have the biggest discussion point about, are you above or below 2 million in net wealth?
Right.
But assuming that one of those 3 can't be met and therefore you're a covered expat, you're then looking at impact of renunciation. And it falls into 3 distinct categories. One is that there's what's called a mark-to-market event. In Australia, it would be called deemed disposal, meaning all of your worldwide capital assets are deemed to have been sold. You get a very big exemption from potential capital gains. It's around 800,000 US at the moment for that. And again, that gets indexed every year. So for a lot of people, that might take out the capital gains tax, but when you're dealing with Australian real estate,
yeah, exactly,
it might not.
Yeah, exactly. Yeah.
B is any kind of deferred compensation arrangements that you might have out there are brought home, meaning that they're deemed to have been distributed. Now, if you're dealing with U.S. plans like 401ks, you can elect out of that and have to pay later on when there is a distribution. But if you're dealing with something like an Australian superannuation plan, that might become a real problem if you haven't been declaring all along the way, as we spoke about earlier. And then C, which is the one that's probably least focused on, is the fact that for gift tax, individuals, normally the gift tax is imposed on the person making the gift. If you are what's called a covered expat and you've left the U.S., and you give a gift to a U.S. citizen, that U.S. citizen is deemed to be responsible for the gift tax at that point, the recipient of the gift.
But if you're over, your net worth is well over 2 million, say it's $3 million US, you can renounce your citizenship, but you have to pay capital gains tax on every single asset you own in both countries.
Well, in both
as
countries.
as if you sold it. Correct me if I'm wrong when I finish telling you this, because this is my understanding that I've been told by international tax specialists, that you can renounce your citizenship by paying capital gains tax on every single asset you own as if you sold it the day before you renounced.
Right.
But you didn't.